you so much for joining us on this morning. I'd like to remind everyone that that this presentation is being recorded. We thank you all. For those who are attendees, you'll notice at the bottom of your screen, there is a Q&A icon. You're welcome to place your questions there. We will acknowledge your questions and our host will answer your questions accordingly. We're so happy that you would join us. This is the last in a series of 3 for our Juneteenth presentation to our small business community. The theme of this series has been business sense, and today we're going to talk about economics in a small business, access to capital, what makes sense, how do we assist you with the information that we have and we will provide to you today to help you further your business. Thank you all for the services that you render to our community. And you're saying, well, who is that guy? My name is Richard Palais. I'm the Senior Vice President of Community Lending. I am a part of the Impact Business Capital team, and our mission is, our tagline, if you will, and all of us who are in business understand that, is we make access to business capital as easy as ABC. We have a 3-step process. It's application, it's business review, and it's closing. Thank you so very much for joining us. And at this time, I'm going to pass the rest of the presentation on to Summer. Good morning, Summer.
Good morning, Richard. Thank you so much for introducing me. I am Summer Fawcett. Thank you so much for that, David. Summer Fawcett, I'm the National African American Business Development Manager for Comerica Bank. And this is actually, I'm so glad we saved this for last, because this is one of my all-time favorite topics to talk about when discussing small businesses, but also small Black-owned businesses. So this is a focus on businesses that have a gross annual revenue of $1 million or less, and that's considered small in the SBA and the banking industry. That's exactly what that is. So we are looking at those businesses. We're talking and we're focusing on those businesses, minority owned, Black and brown owned businesses, and looking at a spot where we understand there's a pandemic. We understand that we are trying to position ourselves and our small businesses so that if there is another pandemic, there is a recoverable rate that's less than 40% of declining and closing doors. And that is the perceived truth of exactly what happened to our Black-owned businesses in 2020. Between the months of February and June of last year, 41% of all Black-owned businesses closed. That's hundreds of thousands of businesses that closed their doors. And this is what we're trying to prevent. And a lot of the talk around it has to deal with access to capital. That's the number one reason why Black-owned businesses and Hispanic-owned businesses are failing, is because of the lack of access. A lot of us use our personal finances and our family and friends to support us and get us through those first stages of being entrepreneurs. And then it starts dwindling from that point on. If we don't have access to capital to continue to gain the momentum of continuing that business, that's when businesses start to fail. So we are extremely excited and very proud and honored to have the panelists here to discuss access to capital. And it goes a little bit deeper than just having the funding. So we get to ask questions, gather all your questions, get those prepared, understand that this is a jam-packed conversation, and they'll dive deep into it, because you have some heavy hitters, some industry leaders that are on this call with you today. I would actually like to introduce the first person that's on our panelists. Absolutely love Ms. Rhonda Davenport. She is our National Director of Retail and Small Business Banking. She's an Executive Vice President, and I'm going to allow her to say a few words about herself before I introduce the other panelists. But Rhonda, go ahead.
Great. Thank you, Summer, and good morning to everyone. Sure is nice to be with you today. I am the leader of all of our retail banking activities nationally here at Comerica, which includes overseeing over 432 banking centers in 5 states, over 2,800 colleagues, 24 billion in deposits. I also have responsibility for our small business banking team here within retail banking. I have over 30 years of service at Comerica, over 30 years in banking, and many times in customer-facing roles, as well as one of my previous assignments was the director of our Comerica Loan Center. So I'm really interested in bringing value to today's conversation and look forward to spending the next hour with this group.
Thank you so much, Rhonda. And we're very excited to have you here, and we're honored. Thank you so much for attending and sharing your wisdom and everything that you have to say. So thank you. And the next person I'm going to introduce is actually the host of this talk, of this event, Ms. Hilda Kennedy. She is the founder and president of Impact Business Capital. Hilda, would you like to say a few words about yourself?
Thank you so much, Summer, and thank you to the Comerica family. You all have been absolutely incredible in our journey. We're a mission-based nonprofit lender specializing in SBA financing, and we're a community development financial institution. And during this pandemic, we have had more exposure as an organization and as a part of the Small Business Administration family because of our work in doing payroll protection program loans and a lot of emergency loan programs for small businesses because we're a community development financial institution. And for those who are attending, if you get nothing else, it is so incredible and so important for you to build your bench. And in building your bench, oftentimes people don't think about CDFIs and mission-based lenders as part of their bench. And we hope that you learn more about us and our ability to help businesses from startups to those who are growing toward legacy by buying their building and buying equipment and creating jobs that make a difference in our communities. So we look forward to sharing more about what we do as nonprofit mission-based lenders in partnership with banks like Comerica to make a difference for small businesses. Thank you, Summer.
Thank you so much, Hilda. And you're going to get so much more information, everyone. Just talking to Hilda and talking to Rhonda, there's a lot of information, especially dealing with legacy wealth. And I am going to leave the very last introduction for Larry Reid. He is our Senior Vice President of National Community Impact and Compliance for Comerica Bank. He's been with us for a few years now, but he has his stamp on California and he's going for the rest of the nation. So I'd like to introduce Larry Reid, and he is going to take it from here. Thank you.
Good morning, Summer. I think I feel pressure now with that introduction. I'm really happy to join everyone here. I am proud, and it is my distinct pleasure to say that I work frequently with both Rhonda Davenport and Hilda Kennedy. I've known and worked with them both closely, and I can tell you they are both passionate advocates for increasing access to folks who need it. And I'm very honored to be here. I've been with the bank just shy of 2 years. It feels like probably about 200 because these are dynamic times that we're living in. I mean, I don't think the word pandemic was in my personal vocabulary, certainly not in my life experience. And all of the people that are on this call, my colleagues at Comerica and AMPAC as well, have all really put their stamp on not just getting folks through it, but planning for their future going forward. So as Hilda mentioned, building your bench, you have to build your bench. And part of that is providing, if you hadn't thought about it, a contingency plan and for that what if factor. And I know that with all the planning I've done in my life, pandemic was never one of them. I live in LA, so earthquake, yes, pandemic, no. So as we look to move forward, the goal of today, I always begin with the end in mind. What are you going to know after this session that you did not know before? You actually have two experts, one in the traditional access to capital, which is the banking structures in institutions, and then the alternative lenders, which is the community development financial institutions, commonly referred to as CDFIs. So we've got the best of the best on this call. So with that, and again, our motto today, our goal today is access to capital. So with that, I'll jump right in, and I'll start with Rhonda. For the average person, entrepreneur, small business owner, how would you say is the best way to get your foot in the door with a financial institution? In other words, how important is to build a relationship versus just being a person who comes in and fills out an application?
Great, Larry, and that's a great question to start with, because at Comerica we truly are committed to being relationship focused, and we know that choosing a lender for your small business financing needs is one of the most important decisions that you'll have to make as an entrepreneur. And the growth and stability of your company may depend on that decision. And when you do it right, your choice will involve much more than just getting access to capital. A good lender not only will provide you with the information you need in a transparent and honest way, but she will also provide you with ongoing assistance, tools, and resources to improve your financial performance and promote your growth. The loan is part of the relationship, not just a transaction. So it's important you compare different lenders, you consider their background, their experience in working with your industry type, your business type. Their reputation is critically important. So I recommend that you evaluate very carefully. So the best piece of advice, Larry, I give when I get this question is approach your lender before you need a loan. Build that relationship. We're not just bankers, we're business financial advisors. We have a proven track record of building long-lasting relationships that provide businesses with financial expertise that support their business. And ultimately, people make business loans to a person, not a business. So developing that relationship is really important. Company owners can benefit from cultivating relationships with lenders far in advance of ever applying for a business loan. Coming out of this pandemic, and to your point, Larry, who could have ever imagined that we would see what's happened over the last 15 months? It's been devastating. And Summer shared some very startling statistics about what's happened to business owners. So coming out of this, more than ever, small businesses need our support. And we're here to help, providing that knowledge, expertise, technical assistance, and offering solutions. So Larry, my best advice is take the time to build that relationship up front and be careful who you choose to partner with your small business, because that will have an important aspect on your success as an entrepreneur.
That's a great. I love that response. In other words, be ready before you need it and do the groundwork. So, as a follow up question, Rhonda, what would you say are some of the important things that business owners need to be prepared to share with their banker in the form of either a business plan, financial statement, tax returns? A lot of folks, I think, are concerned about sharing their info with a new acquaintance, hopefully a future friend. But I don't think people necessarily understand, number one, they're welcome in the bank, and also that it's a safe place to bring your information. But sort of what kind of guidance would you give as far as what documents people need to be prepared to have in their possession when they do start that conversation?
Yeah, great question, Larry, because it really does start with that critical understanding of what's necessary. When we look at financing, we know there's a continuum. When you're a business owner, it's a continuum of your options as a business owner. So where do we start? And Larry, I'm going to take a few minutes with this answer because there's some things that I want to share. But when we're a business owner, and where do we start? We start with maybe our personal finances. Maybe we borrow from a family member. Maybe it's a home equity loan, personal cash equity. In that continuum, you might involve others, might involve a bank after a period of time. CDFI, like Hilda's organization, can be utilized. But on this continuum of this borrowing spectrum, through growth and demonstrating your ability to show profitability, perhaps you transition to a bank like Comerica. And Comerica is dedicated to being a strong partner. Obtaining credit for your business can be a lifeline. So it's important that you establish that relationship early. Being that lifeline will enable you to obtain the capital you need to expand, to cover day-to-day expenses, purchase inventory, hire additional staff. It allows you to conserve that cash on hand to cover your cost of doing business. And while banks don't have universal rules about what makes someone credit worthy, they are guided by some general principles. So Larry, before I answer your question about documents required, let me first get into some background as to what we look at when we establish a relationship with a borrower, and then I'll transition to your question about documents that accompany a loan application, because upfront preparation will pay big dividends for our business owners. There are really 5 principles that guide our decisions here at Comerica, and we do call those the 5 C's of credit: character, capacity, capital conditions, and collateral. And the choices we make reflect these 5 C's of characteristics that can take some of the stress out of obtaining credit from a bank. And I'm not going to go over all 5 of those C's, but I'm going to hit 3 of them. And so as you think about getting ready to approach a bank, and as I mentioned, you're on that continuum of expanding how you your business needs and how you finance your business needs. What I'm referring to is what we look at within a bank like Comerica. So we first start with character, and there's a reason why we start with characters. Lenders need to know that borrowers and guarantors are honest and have integrity. So you need to be able to demonstrate that you're a responsible borrower, because we look at history being that best predictor of the future of how that borrower will respond. A lender will examine personal credit for all borrowers and guarantors involved in the loan. So having a sound personal credit history is a must. We will include your track record with the loans obtained and paid back through the CDFI. That can also be valuable around the character issue here. So in summary, check your credit report, be prepared to address any derogatory items up front, and be ready to work with a banker to establish a relationship around your track record. The second is capacity. So first is character, second is capacity. That measures that measures the ability to repay the loan. So this is not the willingness, but this is, do you have the ability to repay the loan? So we're talking about that as the second C, capacity. So part of that is knowing your numbers. I'm sure Hilda and the team there, bankers are always talking with clients around knowing your numbers. You know, do we have a sound bookkeeper that helps you to manage your finances, your balance sheets, your cash flow statements, profit and loss statements? Does that provide a compelling story to describe the business? You know, knowing that and studying your financial performance and your financial statements help you to understand, do you have the wherewithal and the ability to repay? Because that's what we're talking about here, is do you have that capacity? And the third C that I'll spend just a minute on is collateral. And while capacity is having the means to repay the loan, that first source of repayment is the cash flow from your business operations. What are you generating from your business? Because that's where we're going to look for those loan payments to be repaid through, is your cash flow. And collateral, while it's important, it does become that secondary source of repayment if you want to consider that as more of your backup source. So it's, you know, are those assets that you've identified and used to guarantee the loan, are you willing to put those on the line? Are you willing to pledge those for the life of the loan? So establishing collateral and having an idea of what you're comfortable with pledging before you come to the bank is an important part of that conversation. So you have a business plan, you refine the business plan, includes how you're making your business profitable. Consider the items of character and capacity and collateral, because that's going to help you to understand when you're having that conversation with your banker, what you're comfortable with doing. So there are some common elements of a loan package. And of course, you want to be fluid and confident and be able to speak to your business plan and show that level of confidence and enthusiasm and energy around your business and how you're being successful. But when you're talking with a banker, you know, we are going to not only collect information through an application, but that application will need to be accompanied by information about your business. So to Larry's question around what business documents do we need, the first are those related to the business, your business federal tax returns. It could be 1 year, could be up to 3 years. It just depends on the type of loan that you're requesting and possibly the industry. So we're going to need to see your business federal tax returns. We're going to need to see an interim financial statement, because we know tax returns are an annual event. The interim statements are going to be important as well, because we want to see the income statement and the balance sheet for a snapshot in time. Where are you right now in between the times when you file a tax return? The third aspect around your business that we're going to need to see is possibly the accounts receivable and your aging report around that. So information around the business is first and foremost. Secondly, we're going to need to collect some information about you as a business owner, including your personal tax return. Again, could be 1 to 3 years, depending upon the size of the loan. We're going to need to see a completed personal financial statement. And we're going to ask you to sign a document that allows us to verify your tax transcript. And we will do that through the 4506T verification. There might be other documents that are needed and that might be important. However, if you're buying real estate and maybe there's some other security, we might need extra requested documentation. But the information on your business, the information that for your personal is important, and that's what we request as bankers. So in summary, we're going to need you to know your numbers. You're going to want those current financial statements. You're going to want to include your view through the interims through up to date. You're going to want to be able to explain your cash flow. You're going to want to demonstrate that your company is experiencing growth. Lenders want to fund growth. We don't want to fill up losses. And growing companies are in a better position to pay back than shrinking ones are. So also monitor your credit scores and be willing to think about collateral if that's important. And once you have that package put together, all together, you sit down with your business plan, you work with your banker, you put yourself in a real strong position to move forward with your financial advisor and talking about the terms and what you're hoping to achieve to help your business to be successful. So Larry, I know that was a lot of information, but I really wanted to spend some time up front talking about the different aspects that we look at that oftentimes are not thought of in advance before you start developing that relationship with the banker. Thanks, Larry.
Thank you, Rhonda. And that all of that information is exactly why we are grateful to have you on this panel, because folks need to know, and they need to know when they walk into the door, there's a person who's as learned and experienced as Rhonda waiting to talk to you. So with that in mind, and my other phone ringing in the background, I will switch. It's a nice time to switch over to a question to Hilda. There's a couple things that Rhonda mentioned, and and I also saw a question pop up regarding startups. So Hilda, could you share with our participants a little bit about the information of the journey a small business owner or an aspiring business owner may experience as they walk into a CDFI, not just looking for a loan application or applying for funding, but also the availability of technical assistance, the education needed to get borrowers from, I want to start a business, or I have a small business, but I'm not bank ready. How does that journey get started as they walk in the door looking to a CDFI, looking for access to capital and technical assistance?
Yeah, great questions. And Rhonda, thank you so much for that overview. I think it's so very important. And so if you're thinking about the startup, one day I was a startup in starting AMPAC, so I fully understand that. And I took advantage of resources as well 14 years ago. If you're a startup, Rhonda mentioned interim statements, and you might be on the line thinking, interim statement? What in the world is an interim statement? If you're a startup, you may not know that. I've worked with a number of businesses. You ask them about a balance sheet and they don't know what a balance sheet is. In fact, I've worked with seasoned businesses who don't know what a balance sheet is. So we're a good place to ask smart questions. And the only question that isn't smart is the question not asked. So if you don't know, CDFIs are a great partner to ask all of the questions that you don't know. Even if you've been to your banker and they've asked you about some of these things that Rhonda mentioned, the collateral, and you're like, what exactly is the collateral and how do I get collateral? Those are the questions your CDFI partners can answer for you in getting started and train you on not only our ABC that's in our tagline, making access to capital as easy as ABC, but really training you on the ABCs of starting a business. And we may do that directly, or we may partner with one of our technical assistance providers, like the Women's Business Center or the Small Business Development Center or SCORE. These are U.S. Small Business Administration partners that receive funds from your tax dollars to be able to support you as a startup. In starting up, it really is important to start with a strong foundation. And a strong foundation involves knowing your numbers, as Rhonda mentioned, and knowing your credit. Being aware of what's on your credit report and being able to explain that. There are some institutions, financial institutions, and Rhonda might share some of the ratios or numbers or minimums that they look for in evaluating those 5 C's of credit that Rhonda talked about, your capacity to repay. What does that mean from a historical or projection basis? If you are a startup, you're going to be creating a business plan and financial projections, and those financial projections are going to tell your story in numbers on how you're going to make money as a business. And how you're going to make money as a business, if you're looking for financing, then whether the amount of money you're planning to make as a business is enough to cover the repayment of the loan that you're trying to get to grow your business. And depending on what those ratios look like, meaning your capacity to repay, as Rhonda mentioned, there's a debt coverage ratio that they look at, a bank may look at, that a CDFI, a community development financial institution, may look at differently. So starting with partnerships that can help you to ask the smart questions and ask everyone you can think of. That's a really great role of a CDFI, to walk you through from the business plan, getting your ideas on paper, getting down your financial projections, and then determining what's the best financial partner for you. Typically, banks support CDFIs like Comerica supports AMPAC to be able to support the business that's a startup. And we provide startup capital from $5,000 to $50,000 for startup small businesses, which means that you don't have 2 years of historical tax returns, and you will need a business plan, and you will need financial projections. And a business plan is simply your business story. How am I going to gain customers to follow my passion point to grow my business? And how am I going to, with that passion point, generate revenue, pay my expenses, and have funds left over to support my family and the people who are working in my business? Did I answer the question?
Yes, you did.
Okay.
Masterfully. Thank you, Hilda. So as a follow-up question, I would say with the pandemic has taught us that traditional ways of making a living may not always be readily available. And so a lot of folks who may not have considered being an entrepreneur are now considering it. And there's lots of news about the disparities. What would you say are some of the biggest disparities that you've seen over the past year with diverse business owners obtaining credit? And what are some of the strategies or recommendations you would make for getting over that hurdle?
Yeah, and Summer talked about it early on in her comments about the number of Black and Latino-owned businesses that closed their doors. And part of the reason they closed their doors is because they did not have reserves. They didn't have cash on hand to withstand an emergency. And so I would say what Rhonda said in the very beginning, know your numbers. That's something that we saw most as we attempted to work with a number of businesses to get the emergency resources from the pandemic and the devastation of not being able, to our staff too, of not being able to help that business because they didn't have financial statements, they didn't have tax returns, they didn't have the basic things of knowing their numbers and having a handle on that so that we could provide them with the resources. So I would start there. If you don't have a financial statement and you don't track your financial statements monthly, you need to start. You need to not make excuses. You need to not say, I don't like that. You need to get a team, build a bench of people who do and do it. Because if you're going to be in business, you've got to be in business and you've got to know your numbers and you've got to get a handle on it. Then the second thing that I would say in that disparity and overcoming is to build some reserves. If your comment is my margins are so tight, I can't, I would say figure it out. Save $2, $5, whatever you need to do, start somewhere. It is absolutely critical that we prepare for the next whatever. And there will be another whatever. So in business, we've got to be prepared. And in doing so, we've got to start putting away those reserves. Those were the challenges of economically disadvantaged or Black and brown businesses that caused them to not be able to stand during the pandemic. It's also the opportunity before that same group to be able to start over, start again, look at new opportunities. And you can do that with partners like Comerica, partners like Impact. Get yourself trained and ready. Participate in every training opportunity there is, like many of you are doing on this call, or that you may review this video at a later time. Get to the resource partners that are out there who are mission driven to walk with you hand in hand and to give you the training and tools so that you can sustain yourself and get to legacy building. Go from being a self-employed person to a small business owner, creating jobs and creating positive economic impact. Now is a great time to be a startup, a start over, a restart business, and there are tons of resources for you. And certainly AMPAC is here to support that.
So thank you, Hilda, for that response. And I'll pose this question to both you and Rhonda. I have always felt like a smart borrower, an informed borrower, is a better borrower. Can you explain your role from your perspective, Rhonda, on what role being prepared, being knowledgeable, having done the homework has on the banker entrepreneur relationship? And then Hilda, if you can share after Rhonda's answers, some of the resources that are really available. Some folks don't know, like I have a meeting and there's a question that was in the chat about an upcoming meeting with investors, like some of the resources of how do I follow up on what the 5 C's are and where can I learn more and get more information. But from Rhonda's perspective, being at a national bank, what role and what impact does it have when borrowers walk in the door and they're ready to go with information and research?
That's Larry. That's a great question, because when you are a banker and you want to be that advisor to the business, you want to see that business owner has done their homework. You want to see that they understand the requests that they're making, that they have a good, solid understanding of their cash flow, how the loan is going to be repaid, that they have taken time up front to do their homework and to do the work that needs to be done to be well prepared, so that exchange, that interaction is done in such a way that the banker has confidence in this individual. The other part of it is that the more you can rely on help, like from organizations like Hilda's organization, accountants, CPAs, working with your a financial software program that helps you to really understand that information, that tells you what you need to pull out for your business and where you might have soft spots or where you might be over indexing. Really critical to that relationship. And from our perspective here as bankers at Comerica, we want to get to the yes, right? We want to get to the yes. And if we are not able to get to the yes right away, it might be we can't do it right now. However, we need to see these things, or we're going to help you see these things, get to this point, then we might be able to get to that yes. So it truly is a relationship where there is a consultative advisory type of discussion that happens so that you as a business owner has the confidence in knowing that you got a banker in your corner who's here trying to help you get to that yes. So Larry, the role of the banker, the role of the borrower, we both have a role in that. And our commitment as bankers is to be there as that advisor to help fill in the gaps and to help address questions and help the borrower understand, how do we get to that yes? That's where we all want to get to.
Absolutely. Getting to yes. I love that that concept, because again, for a lot of folks who have never accessed the banking system, they don't really understand that if heads up people, that's how banks make a living. We take deposits, but we loan money, and that's how we get the light bill paid. That's how we help grow our communities and our own business, which is lending money. So our goal is to say yes. So Hilda, along that vein, what are some of the things that folks could come to a technical assistance provider such as AMPAC and expect to learn? Or the only question, I think the only well, I use a different language, I'm a little meaner than Hilda, but the only bad question effectively is the one that's not asked. What are some of the things that folks should be prepared to ask and access a technical assistance provider when they come to AMPAC?
Yeah, great. Very, very good question. Some of the questions that we like to hear someone ask is, what do I need? I know you need my financial statements, but what do I need to show in income? How much income do I need to have in order to get a loan, say for $50,000? And the smartest question that I love to hear, and the one that contrasted with the one that I don't like to hear, is how much would you like? How much will you give me? Please don't ask that question. Know what you need in order to grow your business. I know I need $50,000 because I'm going to hire a part-time employee for $25,000. I need to buy $10,000 of inventory, and then I need another $15,000 for general working capital because I want to use that for emergencies as I'm growing with the inventory. And then I'd like the person to be knowledgeable about how is this inventory going to help me to turn a profit. So I'm going to have this kind of margin on my inventory, and that margin is going to help me to generate this level of gross profit, where I will then be able to have a positive net income. Think through your numbers. You are in business to make a profit, and we are in business to provide resources to you to help you do that. If you, first of all, don't know why you're getting a loan, and more importantly, how that loan is going to help your business grow and thrive, that raises red flags for us. Like the person who called our office, and Richard will smile a lot as I give you this example. But a person called our office and said to us, they need a $10 million loan. And we said, you do? Okay. What's the purpose of the loan? It's for me to expand this idea. What's the idea? Okay. You need to work on that idea. And so he calls the office again, and it's a huge change. Okay, just give me $100,000. 10 million, 100,000. Okay, what is the $100,000 for? And how do you jump from 10 million to 100,000? And then, well, just 50,000. What does that say? I am not prepared. And that says to us, even as a community development financial institution, a mission-based lender, not beholden even by shareholders that you guys have to worry about, Rhonda and Larry and Summer and David, we're really about the mission of trying to finance and foster business success. But we can't do that because you don't really have a business. Because not at one time did we get a business plan. Not at one time did we get projections. Not at one time did we get personal financial statements or tax returns. And I tell you, as we're asking these questions, if someone is ready to give you a loan at any cost like that, I'm going to urge you, buyer beware. Because there are a number of lenders out there, they will give you a no documentation loan. And in getting that loan, be aware that you probably are going to be paying hundreds of % of interest on that loan. And they're going to pull that money directly out of your account. So we call them fintech lenders. Some people call them predatory lenders. They're going to pull that money out of your account. And if you don't have that amount in that account in the next day, they're going to add to that interest rate, and it's going to continue to grow. If it seems too good to be true, it probably is. So be very careful about that. The reason your CDFI or your banking partner is asking questions, sometimes you may feel like hard questions, is because they're looking out for your greater success as a small business owner. And if you can get that fast cash, you're going to really pay for it. And we've refinanced a lot of those loans because small businesses were not educated. They needed to get the money. They needed to get it quick. And getting it quick may not be the best. If you can get it quick, though, and you have a plan of action, I have a contract, I know I can service this contract and then repay that loan, that may be a good fit, but you have to be well educated about how you get into it and how you get out of it, and make sure that you don't get stuck.
Hilda, you covered a lot, and in summary, I would say there's a difference between a pipe dream and a business plan. And pipe dreams are not bad things, because most businesses were rooted from a place that could have been considered a pipe dream. But you got to do the work before you get in front of one of these professionals who are committed to saying yes. We've made those things very clear. I can speak on behalf of Comerica Bank because it's part of my job at the bank to facilitate the partnership between our CDFI partners and my partner inside of the bank, which is primarily Rhonda and her team in our retail facing bank, which I'm very honored to say that, and that there's a very sincere commitment. How can we do better and be better in the communities where we operate? That's a legitimate question. And there's a lot of effort being made to really bridge that gap, to make sure we have effective lines of communication. Hilda, from your perspective, because I want to make sure we leave time for Q&A, from your perspective in the CDFI community, how have banks been supportive, and how do banks support your role as being that bridge between the startup business, the smaller business, those borrowers who have historically been left out or been not at the table with access to capital? What role does the financial sector play in bridging that gap from your services to those of a national bank platform?
Yeah, thank you so much. A critical role in that you provide funds, grant funds, or low-cost capital, investment capital to help us to be able to provide loans to small businesses that are not quite ready for the bank, but we're building that bridge to a banking relationship. And so Comerica in particular has done this in a really incredible way in terms of impact, being able to provide support for a minority business loan program that we launched to help businesses gain access to capital, and training like what we're putting on today, and working with team members like David to put on good programming, this business boot camp, because we know education is really important for these businesses getting started and making sure that they have a firm foundation of information. We can't do the work without these banking partners, and Larry in particular has believed in AMPAC for so many years, and it really propelled us in being able to expand our reach in helping small businesses in the Inland Empire region and beyond throughout Southern California. So really much appreciated. It just can't be done without that support.
Thank you, Hilda. I appreciate that. And we appreciate the partnership. And like I said, internally here at Comerica, Rhonda and her team have been, how can we do more? How can we be better? And, those are questions that are very important to ask, particularly in challenging times. And being able to point to partners like AMPAC makes my job easier to tell that story. So I've supported you over the years because you guys are getting it done. You are results oriented and have a proud track record. So thank you for that answer. So at this time, it's 10:49. I'm going to turn it over to David because I know there are some questions that have come up in the Q&A. I want to make sure that we have given our panelists an opportunity to hear those questions. So David, if you could share with us any questions that may be in the Q&A that have not been addressed, please.
Yes, thank you. We do have a couple questions. This is for anybody on the panel who wants to take a first stab at it. So someone says, I'm about to sit down with investors and I want to make sure I'm ready with any financial documents I might need. We have a business plan, PPM, filed with the Secretary of California, and a 5-year financial projection. But am I missing something else?
Would anyone like to take first shot at that? Or would you like me to?
Well, I would, let me just add a couple things, Larry, and I'm sure you've got a couple thoughts as well. So I think I heard that you're about to sit down with investors. You've got this idea, you've got investors, and now you're going forward in wanting to make sure that you're providing them with a good snapshot of the work and the preparation that you've done. So your credit report, I think, could be very helpful. Again, it speaks to how you've handled things in the past. That might be important. You've got your projections that are done, maybe a personal financial statement that shows your personal wealth, your personal wherewithal. I think that's important. Maybe a tax return. Again, you are selling yourself, and you are putting forward in front of a potential investor who wants to do that level of due diligence to understand, am I willing to invest in this venture? Am I comfortable and confident with the principles and those that are bringing this idea forward to me? I think that you want to demonstrate, as I've shared and as Hilda has shared, that you know your numbers and that why you have confidence in those projections and why you feel that you are a good you're a good opportunity for this potential investor to partner along with you to invest in your business. Hilda, you might have some additional thoughts as well.
No, I think you covered it, Rhonda. And I think that the only other thing that I would say, since you are meeting with the investor, be prepared to know what you're willing to give up. Because when you work with an investor, they're going to want an equity stake in your company. And so be very clear about that, and be very clear about a planned exit strategy for your investor if that's your intention. In addition to financial contributions from an investor, I would also urge you to think about what other kinds of support that investor can provide. Is there some business coaching and other support they can provide to the company, introductions to vendors or suppliers or contracts that may benefit you, really thinking through those things. But again, I can't emphasize enough counting the cost and making sure that you are going in with your eyes wide open on what you may give up with your company by engaging investors.
Those are great pieces of information. And I would just add, if you ever want to know what an investor engagement looks like, you might want to check out the TV show Shark Tank. Everything that has just been discussed is going to be addressed in that platform or platforms like that. Investors want to know how they're going to be paid, and what's plan A for paying them back, what's plan B for paying them back. And Hilda brings up a great point. Your investor may be more than just a checkbook. Their Rolodex may be more important to you than their checkbook, but there's a value for that. I know I value my Rolodex like seriously, because my network and my reputation is how I make a living. Investors are going to feel the same way. So be prepared to answer those tough questions and read everything. And if you don't understand it, please rethink signing it. That goes for loan documents, investor agreements, non-disclosure agreements, non-compete clauses, all the things that are going to come up in a business negotiation. Read it, understand it, then sign it. If you don't understand it, go back to read it, reach out to your TA provider, your counsel, whoever it is that has helped you get to that point. If you don't understand it, please don't sign it. Because that's where a lot of the things that come back to get you, some of the predatory practices Hilda made reference to, with some of the other lenders that are out there, no doc lenders, etc. That's when you get in trouble, is when you didn't know that there were some pitfalls that you voluntarily signed the documents. Thank you both for your answers. David, are there any more questions in the chat?
We do have a couple. So this one we might have touched on a little bit. Someone says, what are the risk factors that banks are utilizing to approve or disapprove a loan application? Is it location, bonding, or age of business?
Oh, I'll take that one. And so when you talk about risk factors, location isn't really a part of it. You know, it really goes back to, does that business qualify, for a traditional loan? When you say bonding, I'm not sure what you're referring to there. But what I would say is, I went over 3 of the 5 C's of credit, and I think there was a question around, we'd like to hear more of those. But we really do look at the character, we look at the capacity, we look at, the cash flow, do you have the capacity to pay? We look at all of those aspects in order to get to whether or not the bank feels that this business has a wherewithal to support that debt. What I want people to know and understand is the last thing that we want to do, and I'm sure the last thing that Hilda's organization wants to do, is make a loan to put you in a position that you can't repay. That's not a good situation for us, and it's definitely not a good situation for you. So, we look at those 5 C's, the character, the capacity, the capital, the conditions, and the collateral. We look at all of those, and certainly where there's ratios and there's different things that go into the underwriting evaluation that I won't get into, but all of that is taken into consideration. Any one of those that is not at a spot where we can be comfortable, it could make it difficult to get that loan done. So truly, it's all 5 of those that are really important to us. So I think that helps answer some of your questions around risk factors, but please let me know if I haven't hit the mark.
And if I could just add to that just a little bit as to why the Small Business Administration exists and partners with banks and utilizes the partnership of nonprofit lenders like AMPAC is there are certain ratios that a bank has to have, and that's in their loan policies and procedures. And then when they have the backing of the Small Business Administration, because there is a guarantee associated with that, and the state of California also has a guarantee program, then those underwriting guidelines or those ratios, those risk factors can be reduced a bit because they have the backing of the federal government or the state government through the guarantee programs. So AMPAC is involved in SBA lending, is an SBA lender, aware of those programs so that if you know there are some shortcomings in your credit profile, go back to where we started with Rhonda, know your numbers, know your credit, so that you can share that up front. We can figure out what's the best product to help you to accomplish your goal. And it may not be a traditional bank loan. It may be an SBA loan. It may be a state guarantee, or it may be some other resources. Give us a chance to know that and be very candid about what you have, what you're facing.
And Hilda, and if I could add on, Comerica Bank is a preferred SBA lender as well. And so partnering with you and partnering with the SBA to attach that loan guarantee is very helpful. So it's a great option and a great resource. And we as financial advisors utilize that all the time to get to that yes, which is what our ultimate goal is to get to the yes when it makes sense.
That's great info. Well, I know we're right about at time, and I know there are some questions that have not yet been answered. I believe there are a couple. So David, if you could please put AMPAC's website, or Richard, if you could put AMPAC's website in the chat so that folks who did not get a chance to get their questions addressed can follow up with AMPAC to get those questions into the queue. If they are a question that would have been directed to one of the folks from Comerica Bank, our team and friends over at AMPAC will make sure we see that so we can address your questions. But with that, I will toss it back to Summer. Would you please close us out? And I want to just say thank you all. It's been an honor to be with you today, and thank you for joining today. A smart borrower is a better borrower, and may you be prosperous and successful.
That is wonderful. I really don't even have to say anything after that one, Larry, but you guys, you did an amazing job. I know there's questions upon questions after this. So if anybody does have additional questions, certainly contact the information that Richard and David are leaving in the comments below. But what has been discussed today is basically 30 years of experience combined, not even combined experience, that's just a total of experience of seeing the waves and the way businesses are performing and running. And this is background information. This isn't information that you just get because you become a business owner. This is information from the people that write the checks. So take the information, utilize it. If you don't understand it, get your team, get your bench that Hilda was talking about, like Rhonda was talking about, get into the banking centers, talk to your banking. These are the people that will advocate for you. So definitely listen, get as much information as you can, and continue to press forward, be resilient. And thank you so much for being here. Thank you, Rhonda. Thank you, Hilda. Thank you, Larry, for your in-depth, just easy information you're not really just going to find if we type it into a search engine to ask these questions. This is information that's based off of experience that cannot be, that really can't be attended. This is just something that people can get from you, directly from you. So we thank you so much for sharing your time, sharing your interests, sharing your expertise. And if anyone has any questions, again, contact all of the information at the bottom of your screen, the bottom right corner of your screen. And this is our Business Bootcamp with AMPAC and Comerica. I hope you all have a wonderful day, and thank you so much again for joining us. Have a good day.
Thank you, everyone. Bye.
Thank you, everybody. Goodbye.
Thank you. Bye-bye.
Thank you, everyone. Bye-bye now.